Ladies and gentlemen, good day and welcome to the Rainbow Childrens Medicare Q3 FY25 earnings conference call hosted by IIFL Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Jivani from IIFL Capital. Thank you, and over to you, sir.
Hi, good morning, everyone. I'm Rahul from IIFL Capital. I welcome you all to the third quarter earnings conference call of Rainbow Hospitals. From Rainbow, we have with us today Dr. Ramesh Kancharla, Chairman and Managing Director, Mr. Vikas Maheshwari, Group CFO, and Mr. Saurabh Bhandari, Head Investor Relations and Group Business Analyst. Over to you, sir, for your opening comments.
Thank you, Rahul. Good morning. So wishing you all a very happy New Year and a very warm welcome to the earnings call for the Q3 and the 9 months of the FY25. I'll discuss the company's progress, vision, and exciting opportunities ahead. Before that, I would like to take a couple of minutes to share that we have successfully concluded the Silver Jubilee celebrations of Rainbow Children's Hospital. Being an young organization with an average age of 32, the events were energetic and electrifying, featuring outstanding performances from employees. It was an immense joy and to celebrate this milestone with the entire Rainbow family, and I was deeply touched for the love and strong bonding the team shares with the Rainbow. We have recognized and honored hundreds of employees for their outstanding contributions. Over the last 25 years, this incredible journey has touched millions of children for their healthcare needs and saved thousands of lives, hundreds of doctors being trained, and created value for all the stakeholders. I would like to take this opportunity to thank all of our medical, paramedical, and support teams for their unwavering commitment in delivering exceptional medical care for children and women, positioning Rainbow Children's Hospital as India's leading children's hospital group. Now I would like to focus on the results of Q3. Here are the key highlights of the first 9 months of the year. We had a strong Q3 performance with a growth across all operating metrics, including our new hospitals launched in Hyderabad, Bangalore, and Chennai 3 quarters ago. These new facilities have now well integrated within our Rainbow Hub and Spoke model. Our IVF services have shown good progress and gaining traction, reinforcing the potential as a key growth driver for future. Recently, we have added a new IVF clinic close to Rainbow Unit Bannerghatta Road, Bangalore, bringing our total number of IVF clinics to 12. As highlighted in the last quarter, we have launched Butterfly Essentials, a dedicated retail stores offering a comprehensive range of baby and women care products. So we have successfully opened Butterfly stores in all of 15 hospitals. This initiative is progressing well with a good footfalls and with an enhanced patient experience. Rainbow opened a state-of-the-art Child Development Center in the last quarter at Banjara Hills, Hyderabad, setting a new benchmark in a pediatric care. This facility now serves as a central hub, consolidating child development services from all the Rainbow hospitals in Hyderabad to ensure comprehensive and efficient care for children in one location. We are still encountering challenges in our international business, particularly in countries like Bangladesh, Oman, Kenya, and Sudan. There has been a significant reduction in the issuance of healthcare permits for patients seeking medical travel. Now, dwelling on to the numbers, for the Q3 FY25, our revenues registered growth of 18.5%, amounting to 398 crores. Similarly, our EBITDA increased by 14%, reaching to 134.3 crores, while PAT registered growth of 10.2% to 68.9 crores. Our overall occupancy rates for the quarter was 53.2%, with the mature hospitals achieving 60.2% occupancy and new hospitals, including a newly launched hospital, recording a 39.6 occupancy rate. Coming to projects update, we opened a new outpatient clinic in the busy residential area of Attapur in Hyderabad. This clinic operates in conjunction with the Banjara Hills facility, ensuring a wider coverage for the hub hospital. The regional hub hospital in Rajahmundry, Andhra Pradesh, of 100 beds is nearing completion and is expected to commence operations by May 25 of the calendar year. The project work at the Spoke Hospital in Electronic City of 90 beds and the Ennur, Bangalore of 60 beds are progressing well. With the both hospitals are expected to commence operations by end of the Q2 FY26. The project work commenced at the regional hub hospital in Coimbatore of 130 beds. The project is running slightly delayed, with the operations anticipated to commence in about 24 months' time. The company has obtained official building plan approvals for the land parcel sector 56 in Gurgaon, and while approval for sector 44 is probably a few weeks away. Our project team is busy in the tendering process. In addition to our growth plans, I would like to highlight some key achievements that reflect the commitment to delivering a high-quality pediatric and perinatal care. Over the past 9 months, we have successfully treated a number of children in intensive care services and also the group level, and managed complex pediatric specialty cases. Here are a couple of notable examples which I would like to present. The cardiac team at Rainbow Children's Heart Institute performed a world's first fetal balloon aortic valvoplasty with a pioneering closure device. So I will explain a little bit about this patient. It's an interesting case. A 35-year-old lady who was carrying a fetus of 27 weeks with a severe aortic stenosis and left ventricular dysfunction, and flow was reversal in the aorta. So our multidisciplinary team, including the cardiologist led by Dr. Nageswara Rao, fetal medicine specialist and obstetricians, have successfully performed a fetal balloon aortic valvoplasty on a 27-week baby of 700 grams within the womb for critical aortic stenosis. The groundbreaking aspect of this procedure was usage of a closure device to seal the puncture site, making the first known globally with this innovative approach. What I'm trying to say is that the heart size of this baby of 700 grams will be about a large grape size. Normally, we have to approach this heart through the puncturing the ventricle, the bottom of the heart, and then go and do the balloon valvoplasty. So this baby is so small. If we do a small puncture, the balloon would not go through. Therefore, our team has decided to use a large bore and wide open so that the balloon can go and do complete the procedure. So that will lead to the massive blood coming into surrounding the heart. So will compromise the life. So therefore, the closure of this hole was done by the device. The heart was actually being closed with a device closure. This is what groundbreaking in this particular case. This is done first time in the world. So obviously, this pioneering success marks a milestone in fetal cardiology, expanding the possibilities of in utero interventions and also bringing hope to the families worldwide facing severe fetal heart conditions. This case was gained wide interest in national media, and almost all major national publications carried the news article. perhaps the Honorable Prime Minister Modi acknowledged this groundbreaking procedure. The second case is successful keyhole surgery for a rare brain tumor. A 7-year-old child who was experiencing persistent headaches for 10 months and gradually losing the peripheral parts of the vision, along with the 2 seizure episodes. The family consulted our pediatric neurology team. Then MRI revealed a cystic tumor in the cellular and supracellular parts of the brain, extending it to the frontal lobe. A biopsy confirmed to be a adenomatous craniopharyngioma, a rare type of surgically treatable brain tumor. The child underwent minimally invasive keyhole surgery, and our surgeons could manage to excise completely the tumor. So doing a keyhole surgery in this child reduced complications like reduced complications and ensured a short stay, and also provided a better cosmetic outcome. So 2 weeks post-surgery, the child was discharged with a complete neurological recovery. So these cases underscores our critical role of a multidisciplinary team in managing tertiary and quaternary care patients. So with that, I will now pass the mic to our Group CFO, Mr. Vikas Maheshwari, to take through the financial update. Thank you once again for joining us today. We look forward to your questions and insights as we move forward. Thank you. Sir?
Thank you, sir. A very good morning to all of you, and thank you for attending this investors conference. I am pleased to brief you on the financials performance and the key developments of Rainbow Hospitals for the third quarter and the first 9 months of current financial year. Our operating revenue for the quarter stood at rupees 398 crores, reflecting a growth of 18.5% when compared to the corresponding quarter of the previous financial year. For the first 9 months, our revenue stood at rupees 1,146 crores, reflecting a growth of approximately 20% when compared to the 9 months of the previous financial year. Our EBITDA for the third quarter amounted to rupees 134 crore rupees, marking a 14% growth compared to the same period last year. For the first 9 months, our EBITDA stood at rupees 375 crore rupees, reflecting a growth of 16% when compared to the 9 months of the previous financial year. For the 9 months of the current financial year, EBITDA is slightly impacted by close to 7 crore rupees due to one-off event related to 25th year's anniversary celebrations. The EBITDA margin for the current quarter is 33.8%, while for the first 9 months, our EBITDA margin is 32.7%. The profit after tax for the quarter is rupees 69 crores, marking a growth of 10.2% in comparison to the corresponding quarter of the last financial year. For the first 9 months, our PAT stood at rupees 188 crore rupees, reflecting a growth of 12.2% when compared to the 9 months of the previous financial year. In terms of the operational performance, both outpatient and inpatient volumes witnessed a growth of 12% each when compared to the corresponding period in the last financial year. Our payer mix continued to remain robust and balanced with 51.3% of the revenue coming from the insurance and the balance 48.7% coming from the cash patients. For the first 9 months, the payer mix stands at 48% cash and 52% insurance. Furthermore, international business constitutes now approximately 2% of our total business for the third quarter. As highlighted earlier by our chairman, we are facing some headwinds in the international business, and we are working to mitigate the impact. I am pleased to inform that our company's balance sheet remains very robust, with a net cash position of rupees 667 crores as of December 31st of last year, and will support our ongoing capital expenditure plan. Given our current cash and anticipated internal accruals in the coming quarters and the years, we remain confident in our ability to complete all planned capital expenditure through internal accruals without any debt financing. During the quarter, the company has invested approximately 22 crore rupees in the capital expenditure. With these insights, I conclude my financial updates. I now invite questions and suggestions from the participants. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of R. Sen from MAS Capital. Please go ahead.
Thank you for the opportunity. Happy to see the good set of numbers that you kind of reported. So just wanted to understand, we spoke about the largest pediatric training program. If you can just share some light about the opportunity size and what kind of market do we see this kind of turning out to be? Thank you.
Yeah. So we train we have about total DNB seats of about 200 across the group to train. This is the postgraduate training for the pediatrics, and it's competitively selected through the NEET examinations. And Rainbow being the premium institute, and the seats get over in the first tranche itself, well within about few thousand ranking. So we also do a lot of super specialty training for the neonatology and pediatric intensive care, pediatric hepatology, hematology, and cardiology. So we have a neurology. So we do a lot of, it's a large training center today and to train people.
Okay. Sure. Sir, just drawing parallel with some of the other hospital chains, not in the pediatric region, space, but especially in the eye space, I see there's a ultra asset-light model that they have kind of used, and especially for penetration into tier 2 cities. Now the question was, is there a school of thought with the management to kind of explore this model to enter tier 2 cities with the ultra asset-light model, which acts as a catchment area and feeds into the tier 1 branches that we have?
For a Rainbow operating model, so ultra light may not suit whether we go to the main cities or even the spoke hospitals or even the districts also. That's because we are a complete healthcare model. We are not a kind of a part of segmental healthcare model. So especially children's healthcare, and also when you combine with maternity, you require the spaces required for the woman as well as children with emergency services and the outpatients department. You do surgical, you do intensive care works, you do birthing. So it's a larger space. So how much ever we kind of concise, the 50 beds is the lowest. About 40,000 are the kind of the lowest kind of the space which we require. That's what actually what we look at it always. Going ultra small, we are actually compromising some of the offerings to the patients. As an emergency hospital, this is going to be difficult for us to operate and satisfy the people and gain the traction.
Got it. So if I may, I'll just ask one last question. This is at a macro level, 1,935 beds as on 2025. Can you share your aspirations till 2030? Where do we see how many beds and at a long-term goal?
So we have a trajectory which has already been discussed about 1,000 beds in the next 3.5 years. Fund. About 400 beds are going to be in the NCR, which is already planned in Gurgaon, 2 hospitals, and the 600 beds are going to be in the regional spokes as well as the spoke hospitals in the south. And the regional spokes which are new, like Rajahmundry and Coimbatore, and those are the new geographies.
So thank you so much, and all the best for the next quarters. Thank you.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Damayanti Kedia from HSBC. Please go ahead.
Hi, good morning, and thank you for the opportunity. So my first question is on your Gurugram side. So can you update us, like, what are the pending approvals? And as you said, like, some work has already started, but when are you expecting to start the construction work? And now, like, what should be the timeline for completion for the Gurugram side?
We are almost there, actually. The permissions, one of the sites have come, and we heard that the site permission is just on its way, about a couple of weeks' time. And we are actively engaged, we have built our projects team. They are all busy in tendering process, and they're trying to float the tenders, inviting people to for the basement building construction. So we are quite active now. Probably we start the site construction in about 4 to 6 weeks' time.
4 to 6 weeks?
Yeah.
And you mentioned approval for Sector 44 is a few weeks away. What about the other site?
Other one is already there. We have received the permissions for Sector 56.
Okay. So very broadly, say you start on the construction, etc., in another 4 to 6 weeks. So reasonably, we should be looking at FY28 as the launch timeline for this Gurugram facility.
Yes, we are also taking some steps to how to speed up the construction, and also going more with the steel structures and those things. Now, there are a lot of things which we are trying to see that how to speed up the process to construct the base building. Then once we have the base building constructed within a year time, then we can set our pace more aggressive to complete it. So we expect about 2.5 years from now to start.
Okay, that's helpful. My second question is your international business. So right now it's small, like 2% of your total business. But what are your aspirations here, and especially in light of what we heard about this Heal in India program for promoting medical tourism? So just want to hear your thought on this part of the business.
So we started our international business as a post-COVID actually. It was going pretty well. Perhaps we budgeted about 4% of the top line to come from the international business about this year. Last year we clocked about 44 crores. We were quite ambitious about it. Unfortunately, that geopolitical situations and also the Bangladesh and some of the areas like Oman is also a problem. And the Somalia, which is our largest contributor, which has got Sudan, they are all into a serious internal problems. So that's why there is a significant reduction in the healthcare resources for all these things. I'm not sure about other groups, but we have seen almost a reduction 40%, right? Yes. 40% in international business from the last year.
So you said you earlier budgeted for 4% of revenue from this segment, but due to macro uncertainties, there has been some 40% reduction from your initial anticipation. So where should we end for FY25 in terms of contribution?
I think the end of this one, I think it's probably about 34 crores or something. We are expecting it to close it now. Last year we did about 44 crores. And, we'll see, waiting for actually things to open up. Our international journey is very early phase, which is why it's a building story. And once things have opened up, we are also exploring other countries' opportunities at the moment actively. Things like Philippines, Mauritius, and Rwanda, and other areas, Zimbabwe. So we are hoping that it's an early phase building story. We also wanted to have a closer connect with the doctors in those African and also Indian neighborhood in those countries, to have a better relationship with them and try to engage to have a better referral system.
Okay, sir. And my last question is, in this quarter, the staff cost, we have seen around 8% sequential decline. I understand there is a bit of seasonality related factor as well. But in your staff cost, like what percentage will be variable in nature and which can just be adjusted according to, say, top line performance?
So Damayanti is a good question. This is a good observation. So if you go back to quarter first, our staff cost was also at around 49 crores. In the quarter second, which is seasonally very strong, so we hire nurses, paramedic staffs, extra on the contractual basis, cleaning, etc. So the cost slightly goes up, and there will be some OT payment because nurses, etc., has to work a little harder on the patients handling, etc. So I think this is a normalized one which has come back to the normal level. So that should be the cost on the current bed capacity which we are operating.
Around 49-50 crore kind of staff.
50 crore rupees is what it should be. In the quarter fourth, obviously, there will be some slight adjustment on the gratuity, etc., but will not impact much of the things.
Okay, that's helpful. Thank you.
Thank you very much.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1 now. The next question is from the line of Sumit Gupta from Centrum Broking. Please go ahead.
Hey, hi. Thanks for the opportunity. Am I audible?
Yes.
Hi. So just now, so on the CapEx part, like now that this Delhi NCR project, Gurgaon Hospital is now moved to FY28. So I just want to understand on the overall CapEx that you planned for the next 2 years. So is it the same like 50 crores that you guided for?
So, see, we have already listed out our capex plan in our presentation. So, in FY25-26, we are coming with 250 of the beds, and these are all asset-light, means these are lease assets. And similarly on FY26-27 is 130 beds. So, roughly 380 beds or close to 400 beds, which will come in next 2 years. Since these are on the leased assets, roughly 60-65 lakh rupees per bed, you should assume on that as a capex. As far as the Gurgaon is concerned, we have already spent around close to 180 to 190 crore rupees on the land acquisitions and related registration and permissions, etc. Now you should budget at around, another 400 crore rupees in the next 3 years' time, starting from FY25-26 to FY27-28. But most of these capex will happen post 1 year, because right now, once we have the approval, the groundbreaking and then foundations, etc., will not take much of the cost. So the most of the cost will come after 1 year. So that is what is the trajectory. The exact trajectory of Gurgaon, once we start the project, we will come to know. But that is the more or less 400 crore rupees in the next 3 years for the Gurgaon.
Understood, sir. Thank you for the detailed explanation. And so lastly, on the, how the overall new centers which were opened in the last 2 to 3 quarters, they are trending in terms of occupancy and profitability. What has been the trend that you are seeing?
So for the 9 months, if you look at, because we have opened our, units sometime in the March last year, right? 9 months before. So if you look at 9 months, our new hospitals occupancy at around 37%. I think that is a good, in the blended basis, which is few units which was opened 2 years back and so on and so forth. If you look at, I think the occupancy level is at a good level. The new units are doing well. It is on the given trajectory. We have already guided our, for the Hyderabad, we break even in 12 months time. For the Bangalore, it takes 15 months time, and Chennai takes some 18 months time. I think these are all on the same trajectory. There is no change on that.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Alankar Garude from Kotak Institutional Equities. Please go ahead.
Hi, thank you for the opportunity. So at the beginning of the fiscal, you had alluded to focusing more on volume growth in FY25, especially with all the new hospitals which became operational in 2024. Now, given that we are seeing decent volume growth across both these newer centers as well as the existing centers, how should we look at ARPOB growth in FY26?
Okay, Alankar, is a good question. See, always we have kept on guiding for the last, at least for the last 2-3 quarters. Say ARPOB is little bit is a different complex subject because there is a two variability. One is the seasonality, second is ALOS. If the ALOS goes up, your ARPOB gets suppressed, right? Though the occupancy goes up. So what we are guiding or requesting all the analysts and the investors to look at what is our ARPP growth. I think ARPP growth has been consistently between 5 to 8% depending upon the quarter on quarter. So I think this trajectory will continue because of two things. One is that the new centers which is getting matured, we have get little bit of the pricing power. Plus the mature centers start operating the more complex cases and a more clinical difficult work where the ARPP etc. is high. So I think if you look at ARPP, I think you should look at something like that 5 to 9% growth on ARPP, which is the real growth because that eliminates at least one portion which is easy, which is ALOS. In our this case, the ALOS has gone up by 12%, right, which has got impacted. ARPOB, if that would not have been, the ARPOB would have been higher.
Actually, that was my other question. ALOS both in new and existing has increased meaningfully in 9 months.
Correct.
Can you let us know the reason, at least for the mature hospitals, what is the reason for the sharp increase?
Because of the operational issues, sometimes, as the insurance business is 50% for us, sometimes the insurance approval comes late. It automatically gets delayed 4-5 hours. So, most of the things are operational efficiency related, plus if the more complex cases, the patients are staying longer at the hospital. So it's a combination of both. But the operational related, whatever is there, obviously we can improve ourselves.
So how should we look at ALOS then going forward? Should it come back to that 2.6, 2.7 number?
9 months median is the good average to take up. So I think it is at 2.8, 2.9. And then 9 months average should be good. We should improve from here, but you should take that average.
Yeah, traditionally, Alankar, our ALOS will be kind of anywhere between 2.6 to 2.8. Yeah? So depending on actually how the seasonal, if there is a lot more seasonal, lot more obstetric side, then ALOS will come down. If there's little more of on the complexity, more of specialties, more of NICU admissions, the ALOS get tweaked more towards a little longer length to stay. So this is the dynamics which is going on. So typically in the Q2, Q3, the ALOS usually will be low, but this quarter the seasonal business is not that higher. So therefore the ALOS are kind of little more tweaked. I will definitely look into that. Are there any other factors that ALOS have increased? So even then, I think the ALOS of 2.7, 2.8 that's what is generally will settle down to a mature pediatric hospital. That's what my thought process is.
Got it, sir. And one last question. You had spoken about evaluating certain M&A opportunities in the past. Can you update us on the progress on that front?
We continue to look at these funds, and we continue to work on these opportunities, and I'm sure we'll let you know once it comes to some degree of kind of a conclusion.
Got it, sir. That's it from my side. Thank you.
Thanks, Alankar.
Thank you. The next question is from the line of Nitesh Dutt from Burman Capital. Please go ahead.
Hi, thanks for the opportunity. My question is related to the new hospitals that we added in Q4 of last year and Q1 this year. I think we have added close to 230 new operational beds. So what was the EBITDA drag because of these new beds this quarter?
Yeah, it's a good question. It is a single-digit high number of EBITDA drag, so it is close to 8 to 9 crore rupees for the 3 hospitals together for the first 9 months.
Understood. Got it. Second question, the delays in 3 hospitals that you mentioned, just wanted to understand the reasons for the delays. Gurgaon one, I think you mentioned due to approvals, but for the remaining ones, and also any chances of further delay or during the stated timelines, by those timelines, the hospital should become active?
I think there's a couple of months delay in Rajahmundry, not much of delay. It is just basically going slow. It's a tier 2 city. Obviously, the challenges always will be there because our teams are all located in the city, so our project teams and also the vendors. So that is a couple of months delay in Rajahmundry. In Chennai, Coimbatore, there was a kind of a redesign of plans that happened because of what there's some change in the government rules and the regulations on the offsets and those things. So that's why we had to resubmit the plans and then get a reapproval process. So being in Coimbatore, all the process runs in Chennai city. So that was some degree of delay. So otherwise, they're all ready to construct and do things. Now execution is going on. I think we want to kind of fast phase it now.
Understood. Okay. One more question. Can you just give some sort of outlook for FY26, both on occupancies and ARPO?
I think it's a bit early to kind of look at it. Still, we are in the current financial year, So probably we'll kind of discuss in the next earnings call.
Sure. No worries. Thank you. I'll get back later.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Nathan Subramanian, an individual investor. Please go ahead.
Yeah, good morning, everyone. First of all, wishes for your excellent performance. Okay, I just want to know, I'm a new investor. I just want to know how do you differentiate a new hospital and a mature hospital? And that means how many months, after you consider a new hospital as a mature hospital? And my second question is, what are the likely growth drivers?
Okay, so how we classify the matured hospital and the new hospital is based on the tenure from the date of we start the operation. So the new hospital we categorize which is less than 60 months, which is 5 years, and the matured hospital is which is commence the operations more than 5 years. So this is how do we differentiate on this? The growth drivers will be 3. One is that our matured hospitals will keep on adding the doctors and the new specialties. So the growth will come from one vehicle of that. The second growth is our new hospitals or the non-matured hospital, which is less than 5 years. They will keep on growing at the faster pace than the matured hospitals. The growth will come from there. The third growth will come from the new hospitals which we are adding. Next year we are adding FY25-26, 3 hospitals we are adding, and we are adding close to 12.5%, 13% of our capacity, close to 250 beds in the next financial year. So that will also drive the growth in the coming quarters and the year.
Okay. Thank you. Thank you very much.
Thank you very much.
Thank you. The next question is from the line of Anshul Agrawal from MK Global. Please go ahead.
Hi, thank you for the opportunity. Am I audible?
Yes.
Great. So any reason that you would want to call out for the dip in gross margins in the current quarter? I believe this quarter would have lower surgical mix.
Yeah. So Anshul, if you are comparing it with quarter second, yes, the mix will be slightly better in case of quarter 3 because the quarter second is seasonally a strong quarter, and there will be a lot of low ticket normal businesses which comes due to the season. So the quarter 3 compared to the quarter second will be a more of surgical or the clinical mix better.
Now I was trying to look at it, sir, on a Y-on-Y basis as well. We've seen a gross margin decline of almost 80 bits. And I thought, considering that there are more medical cases in this, there should not be any reason for gross margins to sort of dip.
So on year-on-year basis, what has happened is, Anshul, that last quarter, March, we have added 3 facilities. And those 3 facilities, the drag has come into the P&L. This is one. And second, as I have informed during our opening remarks, that close to 7 crore rupees is the one-off item which we have spent for our 25th years of the anniversary. If you knock off these 2, probably we are better off on the same EBITDA margins.
Got it. Thank you for that answer. My second question, sir, is on EBITDA margins going ahead. Now I believe we'll about start to see break-even on certain new facilities that we added in Q4, and at the same time, these new facilities should also start coming up in Coimbatore, et cetera. So will our margins sort of remain stable, or do you see that? Do you feel that it will dip for probably about 2-3 quarters in FY26 as well?
So as a business, in the hospital, whenever the new hospital gets opened, there will be always some drag. The question, how much is the drag and how much is the capacity is being opened, right? So if you look at the last year, March, we have opened 3 hospitals, means from April to December, the 3 hospitals drags are coming, but still, our EBITDA margin has been stood at, 32-33%, or for the 9 months it is 32.7%. I think going forward, 3 hospitals which we are adding, obviously there will be some drag, but our effort is that we keep the range plus minus 1%. From there, whatever we are at 9 months, the range should be plus minus 1%. Because what will happen as we progress, the new hospital which we opened, they will also start contributing on the EBITDA side, though on the lower side, but it will, from the negative, they will move to the positive. And the new hospitals will be slightly, drag will be there. So more or less, we should be able to balance it between plus minus 1%. It's a good percentage to maintain, 32.7%. I think it's a good margin to maintain.
Got it. Clear. Just one last question, sir. So once the Gurgaon facility comes online or in the run-up to that, I believe our return profile would sort of get hit because of the asset-heavy nature of this facility. Any insights around how do we see this? Do we intend to get back to our 30% plus ROCE profile post 1 or 2 years of this Gurgaon facility commencing? Any thoughts around this, sir?
See, any capacity which is, large one gets opened, by nature, by arithmetical matter, the ROC will have the impact, right? Now it is a question, how much is the impact? So I'm giving the perspective, the exact numbers will work it around, or you can also work it around, right? Right now we have 200 beds. And by that time we hit the Gurgaon starting, we should be of the size of, whatever the beds we have told it is getting added. We'll be at around somewhere 2,500, 2,600 beds, because some new other acquisition opportunity will get integrated with us. We'll be at the size of, from where we are stand, and we should be 25-30% higher than the current base. And those should be EBITDA generating and contributing whatever the capital we have invested. So that will offset to some extent of the Gurgaon. But obviously, as the Gurgaon starts, there will be some drag of the ROC, but that is the nature of the business. We have to keep on seeding the capital for the future growth and drive the efficiencies, make sure that the Gurgaon facility matures early and then starts contributing. So that is what is our effort.
Great. Thank you, sir. Thank you for a detailed answer.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Pritesh from Lucky Securities. Please go ahead.
Thank you for the opportunity. I have 2 questions. So one on the matured hospital at 60% OR in 9 months. What is the further room in this occupancy ratio?
Yeah, we can actually clock up to about 68 to 70% on matured side. We still have a room to grow further in these matured hospitals. So within the matured hospital bucket, you still have some of them are kind of occupancy about 50-55%. Some of them are kind of doing about 68 to 70% occupancies. We still have a room in the matured bunch of hospitals, and a lot of headroom in the new hospitals.
Okay. And wasn't this that, versus a typical multi-specialty tertiary hospital, a children's hospital, earlier calls you had always mentioned children's hospitals have a lower occupancy. So am I confusing something here, or there is some revision in this OR number?
No, sir. Let's not confuse ourselves with comparing the multi-specialty hospitals, because multi-specialty hospital is a different game. Multi-hospital is a hospital which treats wear and tear problems, right, of a life. Children's hospital is a hospital which is for there is a medical hospital which treats the children who require hospitalization, admissions, and acute illnesses, majority of them. Some of them are chronic illnesses. The proportion is inverse compared to multi-specialty hospital. So therefore, you have a seasonal impact, you have a differential areas in the hospitals, and on top of it, we do not have a fixed government business coming and occupying our beds. So it's a 50% insurance, 50% out of pocket.
Yeah. So, sir, then by that logic, versus 70% occupancy of the adult hospital, shouldn't the children's hospital be a lower occupancy?
Yeah, definitely. We are clocking a lower occupancy because even if you look at the matured bucket, we are having about 60% occupancy. And very unlikely that we cross 70% occupancy because of the differential areas of the beds and as well as the seasonality, combining these two factors without having a government fixed business. So we will always have a kind of a percentage occupancy about, let me put it this way, if we do an occupancy of blended occupancy of about 60%, we will deliver our results. So that is how we kind of positioned it. Do we kind of look forward to increase the kind of occupancies? We would like to do that, but because of these factors, the children's hospitals traditionally will have a much lower occupancies compared to adult hospitals. So that's why we don't say that, let's compare ourselves with adult. It's a different domain.
No. So then that number is still 70 or the number is not less, will be less than 70 for a mature?
Sir, it is only the first children's hospital in the country which is operating at that level. It's a learning story. I think if you ask me at what level we can do it, maybe about 65-68% of the occupancy. Beyond that, it's going to be difficult to clock it because of these factors.
Okay, and my second question is on the Gurugram capex. So did you mention that 180 crore is spent on land plus 1 crore per bed incremental? That's how it is?
Yes, that's correct. Yeah. Another 400 crores.
Okay. So then it becomes 180 and 400. So then your capex is 140. Yeah, it's 145 lakh per bed, right?
Yeah, close to 1.5 crore rupees per bed. That's correct.
So then the ROC in this hospital will be less than 20%. So any observation there? The ROC profile will be really different here.
It will be little different because it is a heavy asset and it is a large facility which is coming up. So when we are looking at ROC, we should look at for the long term, how does it spans it out. And it is going to be something, state of the art, which is being built in India to cater to the whole India, particularly for the North India, international businesses and everything. So, if you look at all other multi-specialties who are putting up the hospitals at that region, their cost is also similar, 1.5 to 1.75 crore rupees. Since its land and building belongs to us, is a little heavy assets, it will cost the same, but from the zero day, we will start as a super specialty hospital with all the equipments, whatever is required, and the doctors, specialties, etc.
The capex of the hospitals are going to be more like a multi-specialty because we are positioning this as a kind of a pediatric multi-specialty hospital of the highest standards in the country. So which is why this as a greenfield project, which is being built for future of the country, and the cost per bed is going to be the same, including the medical equipment. It's going to be a kind of almost pari-pass with any multi-specialty hospital of today's standards.
So how is it different from your Hyderabad cluster, where you have these large hospitals there? So you must be having a multi-specialty hospital even in your Hyderabad cluster, right?
That's true, sir. This is a
how different? Yeah. So how different is it via capex? Let's say you have a Banjara Hill hub. How different it will be from that hub?
So we have spent about 75-80 lakhs per bed, Banjara Hills, about 7 years ago. Today we want to
including land building or excluding?
Excluding base building and land. Here, this is a building with the land and building is our own, and we're going to spend the capex on top of it. So obviously that, 7 years to today, the cost of escalation is almost 30 to 40% time. If you calculate that way, and it's about 1.5 crore is kind of what has been coming.
Okay. So excluding land building, Banjara was 65 lakh. Today that came 65 lakh is about 1 crore per bed for a hub. And over and above that, in Gurugram, you have the land and building also coming in. That's how we should interpret it.
Yes.
Okay, sir. Thank you very much.
Thank you.
Thank you.
Thank you. The next question is from the line of Sumit Gupta from Centrum Broking. Please go ahead.
Hi, thanks for the opportunity again. So there are two questions. First is on the ARPOB. So how do you plan to optimize the ARPOB over the near and the medium term? And secondly, on the Gurgaon facility, like once the Gurgaon facility gets opened, I hope, I expect that international patient mix will change for the better. So how do you expect that to improve the overall case mix as well as improvement of overall ARPOB? Thank you.
Yeah, it's a pretty long shot about Gurgaon. See, obviously this is going to be a different class of hospital. It will have definitely a better price point, and also it is the ability to treat patients are more complex, and we would definitely be positioning in very differently hospital. So closer to that, we can discuss about how the costs, how the revenues are going to play out. It's too early to talk about it. So overall, our ARPOB trajectory is certain, as earlier in the call, Mr. Vikas mentioned about it. ARPOB has got so many other variants to influence. So therefore, I think the ARPP is something which is actually, we've been working for internal purposes. We look at the ARPP more as a significant factor than ARPOB. We have seen in the last 8-9 quarters, our ARPPs are growing about 6 to 7%. So this is how we track it, because ARPOBs can be completely very variable based on the ALOS and based on the seasonality. These two factors keep changing in pediatric healthcare, because the seasonality is always there, the Q2 and Q3, and also the business, we can't anticipate the business mix how it's going to be. So it's not consistently that this is how the business will do it 360 days. So therefore, we need to see, when we look at the ARPOB and we actually again look at the ARPP, as long as the ARPP is growing, we know that the revenue generation is, we know that it is pricing, overall your business is improving in quality.
Okay. So sir, just on the ARPP point only, so like your insurance has been consistently around 52, hovering around nearly 52%. So how, like regarding the price hike, what is the time frequency in which you take a price hike to improve the ARPP, and what are the overall drivers driving it?
One is the price hikes. Number two is the case mix. These are the two things who drives ARPPs, provided you have consistency in the similar set of patients. Let's put it that way. Then you can fix the you will have a ALOS will be more or less a kind of not much of variation. So pricing is always be done everywhere. So you will adjust anyway to the kind of inflation, and also the quality. Every hospital looks at the kind of being a better quality year on year, and adding more and more complexities to the business.
So what is the magnitude of the price hike that you have taken over the last 2 to 3 years?
See, the price hike was at around, on the two fronts is a blended basis we have to do. On the cash side, last year we have not taken price hike, we have just corrected. To the extent the competition was higher, we have just, adjusted ourselves. This year we will take some price hikes. So the working is going on. We are benchmarking ourselves with the competitions, etc. Looking at this one. So probably by March, once we are finishing our budgets, we'll take a call and then inform whatever price budget is being taken. As far as the insurance is concerned, they take a 2 years price and then fix it. But generally, they keep dragging, and it takes sometimes 3 years also, maybe more also sometimes. But on an average, once we do it, we consider that, it is going to be 2-3 years price hike. So the adjustment should happen at around, 12 to 15%. So roughly 4 to 5% price hike from the insurance. And cash, we have to work it around because we are in the competitive landscape. And at the same time, we should not charge more with our patients. We have to be, healthcare. So we will balance ourselves, including the cost inflation, whatever is coming, and balance ourselves to protect our EBITDA margin.
Understood. And so lastly, so in the 9 months FY25, so your ARPOB growth has been like, it has been a decline of 6%. So what was the major reason? Like, did you take any price hike or was it not taken, and subsequently there was an inferior case mix? So what really happened in that?
What has fallen 6%? Sorry, I could not understand.
ARPOB, 6% YY growth.
If you adjust the LOS, you will not get it because the LOS has gone up, right? X of LOS, your ARPOB would have gone up. Or if you look at ARPP, it has gone by 7-8% basically.
Right. So we should look at your thing ARPP and then adjust through LOS.
Yeah. So we are disclosing ARPOB and LOS. If you multiply, you will get the ARPP. Yes. Consistently, we have seen year-on-year basis, seasonal adjustments leaving upon. So you have to see the year-on-year basis. We have seen the ARPP growing actually.
Understood, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Devin from Marcellus Investment Managers. Please go ahead.
Hi. So, what's the extent of price correction that we have taken? You just referred to it while answering the previous question.
Price corrections, okay. So the last year, for the cash patients, we have not taken across the board price hike. We have just taken up wherever we have benchmarked ourselves with the competitions and increased it. The net impact may not be more than 1 or 2% basically if you look at. As far as the insurance is concerned, every year some cluster, etc. will keep coming for the renewal. And the impact of that, as we have just informed, once we take up one cluster or one hospital when we started, it should be 12 to 15% price hike. And generally it is for 2 to 3 years times. So it is, blended basis, it should be 4 to 5% basically. This year, since the budget is going on, we will review with our management and what the other hospitals are doing based on that and what are the cost inflation is expected to come because in our case, 40% is the manpower cost, right, including doctors and the other paramedic staff and the corporate staff. Considering that, whatever the cost inflation is there, we'll adjust it and take a call on that.
Got it. And this 1 to 2% price correction that you have taken, in which cities or which cohort of hospitals have you done it?
Across. Once we take across the cluster. Sometimes somewhere higher, somewhere lower. So that way.
Okay, so like this is, let's say, even in Hyderabad, Bangalore, which are your, let's say, core or old markets as well as new markets, across the board, you have taken a price correction.
Correct.
And it's mainly OPD or IPD or both?
Both, across all.
Okay, got it. And my second question, so, while answering an earlier question, you said that a mature hospital can do around 65-68% occupancy. I remember that when we used to, discuss this a year ago, you used to say that a mature hospital can do 60% occupancy at peak. Now, today, that number seems to have gone up to 65-68. So has anything changed in the last 1 year that we have increased the occupancy cap? Earlier, we used to expect 60 and now 65.
It's an overall trajectory, you see, as we kind of hospitals maturing, more and more hospitals coming into the mature stage, and also some of them are becoming a kind of a very, the almost decades businesses. They will clock a higher occupancies definitely. So if you look at the blended, what I've said is that it could go up to 68%, but it cannot go up more than 68%. For example, I have a few hospitals in Hyderabad. They do about that much occupancy, but those are the hospitals which I have a perennial problem with the beds. Okay, so that's why basis on that I've told, but it will never come to a 60% of occupancy at a group level. It's a possibility, but it can never come to, because you always have a hospitals adding into the mature group. So the blended occupancies will come out to the kind of around 60, maybe around 62%, 63%. What is the maximum possibility a hospital can clock is that one 68%. That's what I say. At a group level, would that be possible? I don't think it's possible because, see, what's important is that it's not checking the patients in. Children's healthcare is a different domain, a different ball game. Nobody would like to stay few hours extra in a hospital than required. That's all drives for children's healthcare. So because of the young parents and the children, nobody wants to stay in a hospital even few hours than required compared to adult hospitals where people are happy to stay a few days extra. So therefore, that's why we never compare ourselves to adult hospitals. It is an evolving story. We are still a pilot project. We are discovering the new paths, new benchmarks all the times. So the answer to the question what I've told is that how much it could go up to is up to 68%. But at a group level, at a matured hospital, where it goes to 68% means, it is at a yearly or quarter level, this is going to be a very difficult task. But anyway, what is a throughput is something which you and I require to look at it. If you are doing about your the 60+% of occupancies in mature hospital, a blended occupancy of about 55%, you deliver your results. What does you want? You want the results, right? You 56% of the blended, you will deliver it. If you do it 60% blended, you will do fantastic. So that's how it is the dynamics of a children's hospital. So we can't keep people in the hospital more than few hours required.
Understood. And finally, so when I'm looking at your mature hospitals' performance for Q3, it seems like the IP volume growth is 0%. In Q2, this number was 8% positive. So that's like slowed down from 8 to 0. Any reasons behind it?
So on the matured sites, the occupancy you must have seen has gone up by, right? On the sequential basis, it has come down, right? Writing sequentially, right? 68.6 to 60% occupancy. Obviously, quarter second is a seasonally strong quarter. And we feel, you see the influx of a lot of patients on that quarter. And if we have maintained the same trajectory in the quarter three, I think we have done a good job, basically.
No, so I am actually looking at year on year. So let's say the occupancy has increased from last year.
You're looking at 9 months?
No, just Q3 to Q3.
Okay.
Yeah, so the last year it was 56.5% occupancy and this year it's 60%. But at the same time, ALOS has gone up from 2.6 to 2.9. So net inpatient volume seems to be flattish.
That's true. That's correct.
Yeah, so this exact number, if we look at Q2, that number had grown at around 8% YOI and Q3 0% growth. So what has happened that the growth has come off?
Not a very particular, time. What happens is that, you keep moving from the mature, non-mature hospital to mature hospital. So that trajectory, whatever you're looking at is a moving trajectory, right? So if you look at on like-to-like basis, if we are comparing, probably we have seen the IP number growth of roughly 9% basically.
Okay.
Yeah.
Okay, cool. Got it.
There is a movement of the beds which keeps happening, so that is where you are looking at. But on the standalone basis, if you look at matured hospitals growth only, it is roughly 9% basically. It's a little confusing data because you are looking at the moving data and looking at the static data. So of the last quarter, so that is the difference.
Thank you. The next question is from the line of Nilesh Dutt from Burman Capital. Please go ahead.
Just a quick clarification. The 7 crore one-time impact that you mentioned, was it for Q3 of this year or was it during previous quarter?
So quarter second and quarter three is evenly distributed, you can say, almost evenly. So 3.5 crore rupees roughly in this quarter and the last quarter is the similar amount. So total 7 crore rupees in 2 quarters.
Understood. Thanks.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Yeah, thank you. We appreciate your participation in today's conference call and the insightful questions. Your support plays a vital role in our strategic progress, and we truly value the time each of you has taken to understand our business and the future plans. For the further information, if any, please reach out to Mr. Saurabh Bhandari, our Investor Relationship Head, at investorrelations@rainbowhospitals.in. With this, I close the conference. Thank you for participation. Thank you.
Thank you.
Thank you.
Thank you. On behalf of IIFL Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.